Hello guys and welcome to my channel once again. Today is 23 of November 2025 Sunday and it is currently around 4 4 p.m. West African time. So I'll be doing a weekly recap and also a forecast on gbpusd, and I'll be touching some aspects on gold and BTC as well. And let's get into the video. Last week, remember, I was looking at bullishness on gbpusd. I was looking on this monthly bullish fair value gap to hold, which it did not hold. I was looking at this fair value gap, this monthly bullish fair value gap, and it didn't hold because last week Wednesday did not actually buy on gbpusd. We didn't see any buys. I was expecting the week to be a bullish week, given that the last 2 weeks ago, previous 2 weeks ago, were rejections. I was hoping for an expansion on the weekly time frame on gbpusd, but we didn't have that. If you remember vividly when I said that there should be a failure of the weekly fair value gap, of this weekly fair value gap for these buys to hold. Now, that didn't work. We didn't get that failure and price just continued to plunge. And like I like to trade just Fibonacci's and fair value gaps, what do we see here? We saw that price failed to push higher. We were at this area, price failed to push higher and just fell. It fell off and this created this bearish 4 hour fair value gap. You can see this bearish 4 hour fair value gap, and that was what I actually used to trade. That was everything I did. Last week was choppy on gbpusd. Price didn't really do much from Monday till Friday, and the whole price action was messy. The only setup that gbpusd was able to produce was this bearish fair value gap, which, like I like to say, you throw a fib on it. I throw a fib on it. If you throw a fib on it from the key level or the key range to the third candle, when you measure out the key range, yeah, you have this. But I didn't measure out the key range in this scenario. That's because on the 1 hour time frame there is an order block that is above this fair value gap, and that is the reason I put that into consideration, because when there is an unmitigated PDRA above your fair value gap, price have every reason to retrace more deeply into that PDRA. Sometimes price just ignores it, takes the fair value gap and goes on its way. And sometimes price actually comes back to that PDRA. So like I said, we had a 1 hour bearish order block right here, and that caused me to take it into consideration. I took that into consideration, and that made me take the full measurement from the first candle to the last candle of the Fibonacci, and that was it. I took the 79% level. Price actually produced um about 73 pips, which is a 1 to 3 and all, but I like to take a 1 to 5, or I take the minus 68% or the minus 27% of my Fibonacci as my take profits. So price provided a 1 to 3. I didn't take out my profits. I like to get in once and get out once, and I manage my trades how I see fit, depending on what price action is. So now that was it for the week. Last week did absolutely very little, didn't really do much here. What will I be looking out on gbpusd now? If I start out on the daily time frame, if I start out on the daily time frame, I would be expecting a previous day high sweep. I'll be expecting a previous day high sweep and a tap into this bearish fair value gap. I'll be anticipating something like this to happen. maybe we could have this. We could have this. Price could do that, or it could just, as you can see, this is a sweep. This is a sweep. So price can also have a reason to do this. This week could be bullish. You never can tell, but what is my bias? How do I ascertain my bias right now? What is my sentiment going into the week? Going into the week, we see that prices are taking this bearish fair value gap and it is currently holding. If that's the case, then we should be seeing lower prices, which means that bullish monthly fair value gap is likely not to hold, and this may be our drawn liquidity. Now, you drop down, what supports that idea? We see a daily fair value gap, bearish fair value gap, supporting the sales idea, all right? And we see also overlapping at the area here. We see that this fair value gap has been tapped multiple times, and eventually we've had this big candle closure. So basically, this bullish fair value gap on the daily time frame has failed. I don't expect it to provide any more strength, or maybe out of the blues, price just starts buying and we'll start seeing new buy price actions that we could follow. But currently, I am bearish on gbpusd because on the daily time frame, there is obviously this bearish fair value gap. The price can continue lower in two ways. Price can sweep this high, its previous day high, and fall, or it can sweep Thursday's high and fall, whereby it taps into the bearish fair value gap on the daily time frame and it just falls. All right. In that case, if I drop down to my 4-hour time frame, what I'll be seeing is my trade that I still have running. I still have this trade running. I didn't close because I believe somewhere that price is just going to fall. Price is probably going to ignore. Price is going to ignore this fair value gap, this bearish fair value gap. Reason is because this is a breakaway gap. All right, this is a sneaky breakaway gap. I call it a sneaky breakaway gap because on the third candle, we see price buying up really strongly. And then all of a sudden, it rejects. This kind of rejections normally follows through and price just keeps selling without having to come back to the fair value gap that it left behind. All right. Normally, we call it breakaway gap when the third candle closes above the middle candle. Like, take for instance, this bullish fair value gap on the daily time frame right here, this bullish fair value gap. We see the third candle here closes above the high of the middle candle, and that's a breakaway gap. In rare cases, price comes back to tap into the fair value gap, right? But in actual cases where price really wants to run and price action is good, we see price just continue moving in its direction, ignoring the fair value gap. In this scenario, we see that price creates this bearish bulky candle, yes, and then the third candle swept the low, bought this high, and then rejected strongly. To me, that's a sneaky breakaway gap. And if I was gonna trade this, I would throw a Fibonacci. Mind you, put into consideration that it is a breakaway gap. So I'm not expecting the fair value gap to be traded into, because if a breakaway gap is supposed to leave its fair value gap untapped, unmitigated, unfilled. And if that's going to be the case, if that is the setup we are looking at currently, then the third candle is going to be my area of concentration or sensitivity, right? I can blindly just take a sell here, managing my risk appropriately. I like to take the 70% level, like I always say on the Fibonacci. And I protect just the highs right here. I protect the highs of that fair value gap. Why? Because when you look at the concept of breakaway gaps, it's supposed to ignore the fair value gap. It's supposed to leave it behind and continue its direction. And if that was this breakaway gap, this sneaky breakaway gap, it's sneaky because a lot of people don't know about this breakaway gap. A lot of people don't know how to spot it or what to do when they see something like this. They don't know the psychology or the story behind it. So they just tend to wait for it to fill into the fair value gap, and sometimes they don't come back to the fair value gap. So if I treat this as a sneaky breakaway gap, if I treat this as a breakaway gap, I am not expecting price to come back into this fair value gap. So when I throw a Fibonacci on the third candle, being a breakaway gap, I should be seeing a tap into the 79% or the 61.8 or the 70%, and then an instant rejection. All right, an instant rejection into lower prices. And that's more reason why I did not close out my sales here. That's more reason why I didn't close out the sales, because I'm expecting the price just continues falling from Monday. Yeah, because on the daily time frame, the fair value gap that's there is a sneaky breakaway gap. But there are rare cases where a breakaway gap gets filled and then price continues in the direction and continues selling. So I'm leaving this trade on gbpusd, this sell on, and we could see Monday just fall without having to come and sweep these highs. We could see Monday just resume its sales and take out this draw on liquidity right here, and that is basically the recap of everything I was waiting for last week, and also like a forecast of what I'll be expecting this week. So I'll be expecting bearish and lower prices on gbpusd. Lower prices. In that case, I want to see the 4-hour time frame create new bearish 4-hour fair value gaps that I can continue to monitor and confirm and take a trade off of. Bearish week on gbpusd, and that is my weekly forecast and anticipation. That's that about that. Price should take this bearish sneaky breakaway gap and just continue falling downside on gbpusd. That's basically it. Why? Because the weekly time frame has a bearish fair value gap that seems to be holding right now, and if that holds, the monthly bullish fair value gap on GU, this monthly bullish fair value gap right here, is going to fail, and price can continue seeking lower prices. This is going to fail, and price could seek lower prices into these lows on gbpusd. So bearish fair value gap on the weekly time frame, daily time frame, bearish fair value gap. It's a sneaky breakaway gap. That's the type of fair value gap. A breakaway gap, we could see lower prices. If not, if we don't see lower prices, then we can see price just buy up within the week and destroy the wholesale ideas, and in doing that create 4-hour bullish fair value gaps going up to the upside, where I'll be looking to confirm and take a trade off of. This right here is my area of protected liquidity. Every fair value gap beneath this high that is not sales is not valid. Is my area of protected liquidity, rather. Yeah, there is a concept behind that I use. So until this is traded above this line right here, until at 1.31560, until it is traded above and price is creating new 4-hour fair value gaps above it, price is still bearish. That's why I left my another reason why I left my gbpusd bearish trade open is because as long as price is under this line, price is bearish, and we can see price is struggling to create new bullish fair value gaps under this protected liquidity. So it's very, very obvious that I could expect to see that Monday just falls, Monday, Tuesday just falls. And if that don't happen, I want to see price go above this area, this line, create new 4-hour fair value gaps, and then I'll accept that we are bullish and I'll follow the price action upwards. And that's that on gbpusd. I'm moving on to gold. Moving on to gold. On gold, I didn't take this trade, but I caught it on paper trading on trading view. And let me do a quick breakdown of this trade so that I can use it to expatiate on my system and my strategy. All right, I will start from the monthly time frame. The monthly time frame. On this monthly time frame, we see that this is a breakaway gap. So I don't expect it to come back to this. Um, I don't expect it to come back to this gap before it continues buying. We are bullish on gold, and gold is an all-time high instrument. So usually what you should be concerned about is just looking for buys and new buys, reasons to continue buying gold. All right, it's an all-time high instrument, and on the monthly time frame we have this bullish fair value gap right here. We also have this bullish fair value gap right here. So I'll be expecting gold to resume bullishness at some point. But right now, I was able to catch that sell on the 4-hour time frame due to this. All right, there is no structure, there's no old structure because it's currently in its all-time high state. There is no current structure to support the bearishness yet, but that was taken out of context of the daily time frame. The daily time frame provided this huge drop down, which was a rejection. The daily time frame provided that, and in doing that, it left behind an order block and an unmitigated fair value gap. We see price trade back into it after all this one failed. We see price trade back into it and fall, and then created new daily bull and bearish fair value gap. And that is what the trade originated from. When we see this, like I like to do, when I see this, I when I see this, I throw a Fibonacci on my Q range, all right, from the middle candle to the second to the last candle. Yes, so when I do that, like I said, I'm looking at my area of sensitivity, the 79%, the 70%, the 61.8% levels. And these are the levels I am looking to get a drop from. These are the areas I'm looking to get a drop from. We see price don't get to the 61.8 or the 70% level, but on the 4-hour time frame, a signature happens. Yeah. So when I drop down to the 4-hour time frame, what do we see? We see price tap into the daily fair value gap here, and then it creates another 4-hour bearish fair value gap. Another 4-hour bearish fair value gap right here. Because we're coming from the context of a daily fair value gap, you want to ignore every other price action that is a retracement. Now, bear in mind, you want to be ignoring price action that is not in your bias. Price can make a retracement, and in doing that, pump hard. For instance, you are bearish now, and price is retracing by buying back up into your point of interest. It may create fair value gaps going up. You're not interested in that. You are waiting for price to reverse and create new fair value gaps that is going in your direction. That is your interest. That's your job as a trader, to wait patiently for a setup that is in line with your bias, that is in line with the context of your bias, of your sentiment, of your direction. So we see the 4-hour time frame create this fair value gap, and then I throw a Fibonacci on it, like I like to throw from the middle candle to the last candle. In rare cases, if there is an unmitigated PD array on the 1-hour time frame or on the 4-hour time frame, then I put that into consideration, expecting that price could retrace deeper, so I can take the full range and measure. But in cases where price action is clean, I measure from the middle candle. Now, if you look at this case, the third candle is, or the first candle rather, is a small candle. The middle candle is an expansion, and the third candle is a small candle. They are both consolidations. What I do is I measure out the whole thing of the middle candle. All right, I measure out the middle candle, and where does that fall directly into? The 70.40% level. I didn't think that myself, but I left I left my short tool on it. just like that, and boom, that was that was a good 1 to 3 trade. Yeah, I guess about 1 to 3. That was 1 to 3. 20 minus 27%. Like I like to get out sometimes if price action is not very clean. But I really believe price is going to continue going down to some extent until there's a reason for you to buy. Price could just continue retracing, and that was it. If you go on the 1 hour time frame for a signature, you see that there was a bearish order block here. All right, there was a bearish order block, and that's in line with your concept, with your context. It is in line with your direction, and it is in line with your narrative that came from the daily time frame fair value gap, and that was that on gold. So what I would I be expecting on gold into the week? Very quickly on gold, gold looks like it's in a tight range on the weekly time frame currently. So you don't want to make any rash decisions or any hasty decisions, all right? There's currently no fair value gap to ascertain direction except these. This was already tapped. So this is a residue low because it is a low that price left behind when it came to tap into this fair value gap. Right? The residue low can be reused as an excuse to resume a trend. So we can see price come here, sweep this low, and then just continue buying on the weekly time frame on gold. So until that happens, we are only looking at daily time frame, which is showing clear fair bearish fair value gaps. So if you don't have fair value gaps, you don't have a trade. Fair value gaps show you everything, everything, absolutely everything. When a market that is void of fair value gaps is void of quality price action, is void of quality conditions to trade, and that's just the truth. You can argue with me. That's your opinion. This is my opinion, and I believe the most repeatable PDRA, the most consistent PDRA is fair value gaps. It could be other things too, but when you pay it with fair value gaps, you come to see how much accuracy and how much your win rate can increase. You get so that's that on gold. I'm expecting a sweep of this low and then maybe a resumption of buys, but till then, I'll be looking to sit out on gold right now or follow through on sales. I will be looking to follow through on sales. If that happens, if this trade that I took, I'm going to call it a ghost trade because I did not execute it anywhere. I just put on my short tool there. So if this actually falls, I'll be glad because I actually saw it coming. So yeah, my analysis is right and all that. I took this. This was clean. This buy was clean. I can just quickly show you um, what sponsored this buy. Yeah, very quickly. Look at this, right? This is a bearish. This is a bullish fair value gap, right? Now this is also a bullish fair value gap. I remember throwing a fib like this here, and then I just saw price really thinning with it and falling really hard, and then I just knew that fair value gap was not it, and I put this other one into consideration. This fair value gap right here. That was the only reason why price will be falling. Now I didn't take the key. I didn't take this key range from the middle candle to the third candle. I took the full range this time, and there's a reason I did that. I took the full range because the Fibonacci, when you take the key range, had no overlapping levels. It had no overlapping sensitive levels. If you look at it here right now, the last sensitive level, which is the 79%, was already at the entry of the fair value gap. I like my sensitive levels to be somewhere inside of the Fibonacci so that it makes sense to understand that okay, price is going to mitigate fair value gap, take one of these levels and just reverse. So I took um the full range of the fair value gap. 1, 2, 3, and one, forget about this other gap here. 1, 2, 3. This is the gap that is associated with this 1, 2, 3 formation. When you're looking at this fair value gap, this gap in here, you're looking at 1, 2, 3, right? That's how fair value gaps work. And that was it. Price really almost tapped into my stop loss, but then it reversed strongly. And that was it. Started creating breakaway gaps, and you see how price never comes back to these breakaway gaps because the third candles keep closing above the middle candles, and that is a breakaway gap. That's how breakaway gaps work. So on gold, bearish, also on gbpusd, bearish for the week, and we'll be looking out for 4-hour bearish fair value gaps to the downside that we can follow through. Now, if I move on to BTC, if I move on to BTC, woof, BTC has been falling. BTC has really been falling, and I marked this out some time ago, a very long time, when price was still here. That's 1, 2, 3, 4, very very long time, very long time. I don't have BTC on my chart, but I saw that it's been falling lately, and then I added it back on to see that I already had this level there, and I don't really remember the analysis behind me pointing out that this was liquidity. I think we were going towards a new all-time high, so yes, I pointed it out as liquidity. But what's the current price action on gold? We are looking at fair value gaps, new fair value gaps, and honestly speaking, on the monthly time frame, there is nothing to hold on to currently. This is already used, this setup is used, this one is already filled because price has gone way too low. So what I'll be looking at, let me take this out, is a sweep of this residue low, because that was the last low that price used to react from the fair value gap before it bought this high. So I'll be looking at this, maybe a sweep of this low and new fair value gaps to the upside to confirm that we have resumed bullish. But for those looking to trade BTC USD on the weekly time frame, this is all I see. I see more bearishness currently until there's a reason to buy. So right now, what is obvious here is the bearishness, the bearish breakaway gap. So we have this, but this is a breakaway gap, so I don't expect price to come all the way into. Now this is crypto, all right? It works differently from um futures and stocks and FX, all right? This is crypto. So it may not respect everything that the plan says, everything that the strategy says, but when you really do the work to um, back test, forward test, and to trade in hindsight, when you do the work, you see that fair value gaps and the use of Fibonacci actually holds on it. Yes, it actually does hold. So yeah, I'll be expecting price to first of all use this breakaway gap. When you're dealing with a breakaway gap, you are not expecting the fair value gap to be traded back into. So what does this mean? This means the third candle of that fair value gap, which is the breakaway gap, is what you are expecting to hold. So if that happens here, this 70% level, 79% level, I'll be expecting price to just very quickly tap into here and continue falling. If price is going to reject and keep this fair value gap intact to keep selling, I'm expecting these areas for to hold price down. But then I'll be looking for signatures that make sense, that would want to cause price to really react from these levels. We're on the weekly time frame, and time frame relativity would ensure that I go to the 4-hour time frame. I relate the monthly time frame to the daily time frame, the weekly time frame to the 4-hour time frame, the daily time frame to the 1-hour time frame, and I stop there. 1 hour I relate it to the 15 to the 5 minutes. The 4 hour I relate it to the 15 minutes or the 1 hour. But I basically just stop at 1 hour. So yes, I'll be looking for a signature on the 15 minutes time frame. This is the weekly time frame. Sorry, I'll be looking for a signature on the 4-hour time frame. So what do we have for a signature? We are either looking for a residue high sweep, or an unmitigated order block, or an unfilled fair value gap. So what do we have? This is our 61.8 level, this is the 70% level, and this is the 79% level. Between the 61.8 to the 79% level, we have over here a breaker block. One, there's a breaker block here. You see this is an overlap of PDR rates. We have another block, a refined order block, because basically the other block would start from here, the breaker block, and then in between we have a fair value gap. So very quickly, without dabbling around, I don't expect price to come this high into this weekly fair value gap over here. There's a lot of reasons for price to just do a self rebalance. I'm going to call it an immediate rebalance of its third candle, an immediate rebalance of its third candle here, of this its third candle, and fall back down. So without really putting much analysis into this, I could simply take this other block like this. It's a waiting game, all right? It's a waiting game. You don't have to, when you understand that an area of sensitivity should get tapped, and within the next couple hours price should start rejecting. So sometimes I don't throw my stop loss all the way to the 100%. All right, I put my stop loss in where psychologically the trade is supposed to be invalid. So how far can price go? Price can also come here, sweep these highs, and maybe fall back down. So it makes sense to protect every other thing. Yeah, it makes sense to protect everything. But if there was no residue high here, I would have probably just protected this high. So if I manage risks appropriately, I could get a 1 to 5 off of this. This strategy will have you waiting, but when it clicks and it's running in your favor, bro, you are in for the money, because now you don't even need to do any other thing. You're just gonna let it run, and let it run you will. So 1 to 3, 1 to 4, 1 to 5. I like a 1 to 5 better. So yeah, if price follows the concept of a breakaway gap on this weekly time frame, then what I want to see is that simple. It tap into the 70% level from measuring this third leg, this third candle, because it's a breakaway gap. So you measure the third candle. From measuring this 70% level of my Fibonacci, I take that, and then I take a 1 to 5 on this, and basically that's it. That's just it. We want to see price this week come into this and fall. On the 4 hour time frame, you saw the signatures. There is another block, there is a breaker block, and there's also unmitigated or unfilled fair value gaps, very fair value gaps in this weekly time frame candle. So there's enough reasons for price to retrace back into this area. There's enough reason to call it a sensitive area, and there's enough reason for price to ignore this garish fair value gap and just fall. And that will be it for now, guys. I will see you during the course of the week again. If there are any updates, any new setups, my entries and my exits, I'm going to be making a content out of it all as a means to journal my trade, to show proof of work, and like I say, create like a live portfolio such that um I can just refer somebody to my YouTube channel and they will see everything that I have going on. And also to help every other person that is confused on how to wait, what to do. If you believe my strategy actually aligns with you and you find some understanding to it, you put in the work to really test it, to be patient. It is a patience game. All right, it's a game of patience. If you can be patient enough to see it play out, to see it form and play out, you'll be glad that you actually adopted this into your system. All right, perfect. Thank you.